welcome to What Would It Cost? Today we have our special guest, an old friend of mine, Dawood from Best Florida Homes.
How long have we known each other?
Oh man, I had a flashback to 2008 where we did a long weekend event.
I'm pretty sure it was way before that as well too.
It's a while ago, man.
Let's not talk about those days, but they were definitely great times, and I love our friendship, and we've managed to maintain it for as long as we have as well too.
Yeah, definitely, man. I've always been a fan, and I've always seen you move and shake down here because your roots go back to when in Canada?
So I moved to Florida in 2002. I'm Canadian as well too. A lot of my family, my friends are still back home. Obviously, I made the wise and warm move of moving to Florida over 20 years ago now. And I'm actually happy that you're in my neck of the woods. Yeah. You could be freezing in Canada right now, but you're here with me and you're wearing shorts. I like it.
We hit the pool together.
Yeah, we will. Absolutely.
I love it. So tell us a little bit about what was it that transition, when that happened, and what had you stay here? How did your real estate career evolve? Tell us a little bit about that.
So it's interesting. I moved here because I came on a vacation in January and I realized that the sun was out, there was palm trees everywhere, and I said, you know what, I can't go back to that cold weather. I love my friends and my family in Canada, but this just seemed like it gravitated me to move here and want to be here in Florida. My real estate career started ironically when most people were exiting the real estate market, which is in 2008, when basically the rug was getting pulled over from underneath your feet, so to speak. But it presented a really great opportunity because through the extensive network of people that I know back home, it seemed like the most logical thing to do. And what do I mean by that? Instead of being in Florida and waiting for clients to come to you, and hoping that you can cast a net and catch them, we decided to change the game. And what we did was we went backwards. We went back to Canada and we discovered, which was pretty simple and evident to know and understand, is that every single Canadian comes to the same conclusion around the same time every single year, which is just as the weather starts to turn, everybody says, this is going to be the last winter I'm going to be here. And unfortunately, when summer rolls around and you can go to Muskoka or wherever your cottage is, you think you're going to have an endless summer. And unfortunately, we know that that's not the case. Therefore, it was easy for a Canadian to go, you know what? I want to buy a property in Florida. But in 2008, the only types of properties Canadians could buy at the time were essentially long-term condos. These condos at the time were selling for about 50, 80, under 100 grand, and you can get yourself anywhere from a 1 to 2 bedroom condo. A lot of these associations were in shambles because they weren't funded properly. A lot of the investors walked away. However, the advantage that the Canadian had over a investor in the United States or anywhere else for that matter is you could pretty much say that every Canadian walking on the street that owned a property had anywhere between $50,000 to $150,000 in equity in their home. Yeah. They could easily draw the equity out at the time with a very, very, very nominal amount. I think it was 2% or 1.9% or something incredibly cheap like that, and bring it over to the United States and purchase a property. Now, ironically, when the market crashed in 2008, the Canadian dollar was still at about $1.30, $1.27, $1.25. Shortly after, because the US started to print a lot of money, the Canadian dollar strengthened, and in fact, it was at par, if not even stronger than the US dollar, which posed the perfect storm for a Canadian investor. Why? Because for the first time, a Canadian could buy this property at par. They could go out and essentially buy a property for 80, 100 grand, $120,000. And in fact, we ended up packaging a lot of these properties where we found the tenant in place. We had some great incentives such as property management for 2 years, or HOAs were covered by the developer for 2 years. And Canadians loved it. It was a turnkey, headache-free investment property that they could buy. But unlike any other investor, they were actually able to buy this property on steroids. What do I mean by that? You were buying this property at below replacement cost. You were attaining cash flow. The property appreciated over time. And the X factor that nobody in America could ever take advantage of is that when they sold the property, they could actually get another 25 to 30% lift simply in the exchange rate.
Yeah.
So imagine these guys borrowed money at, call it 2%, right? The cap rate at the time for these properties were, let's say, 8 or 10%. So essentially, they bought the property for free.
Yeah. Yeah.
Wrap your head around that. It presented such an interesting opportunity that we had literally hundreds of clients that came down to take advantage of investing in our Florida market. Ironically, that created a business that I've been working on for a decade and a half, which is 90% of my business comes from Canadian investors wanting to invest in Florida. And as times changed, Canadians no longer had to purchase these properties cash, but in fact could start to get financing. America's fastest growing bank, TD USA, started to provide mortgages to Canadians with as little as 20% down. And then you had other players in the market, whether it was an RBC or BMO Harris or whatever the case may be. And now the Canadian taste started to change because they could start to afford more expensive properties. And they started to become either luxury or destination properties. What do I mean by that? You went from an investment property that you wouldn't be able to use. And people would always tell me, listen, on my next property, I want to be able to use it sometimes and then rent it out the other time of the year when I'm not using it. And what ended up happening was the financing started to allow Canadians to purchase in cities like Fort Lauderdale, Miami, Naples, that at one point in time were too expensive to purchase outright cash. But then it also opened up a phenomenal new market, which has also been accelerated through PropTech, which is the short-term rental market, which is probably the biggest and the most successful in the world in Orlando, Florida. Mm-hmm. Why? You have drivers that sustain the tourist economy, such as Disney, Universal, SeaWorld, Legoland, and I can go on and on and on and on, which attract about 78 million people. So let's put that in context. 78 million people, Niels, is
annually,
double the population of all of Canada, plus HST coming to visit one destination. So you think you're not going to do well on your short-term vacation rental?
Yeah.
So more and more people started to want to invest in these types of properties. Platforms like Airbnb, VRBO have become accelerators, catalysts for more and more people that want to take advantage of that. And believe it or not, COVID was probably the greatest catalyst for more people to invest in that segment of real estate. When COVID hit, we in Florida experienced COVID for 6 weeks.
Yeah.
That's as long as our market shut down for. And our governor 6 weeks later said, open up the vacation rentals. All the parks were at capacity. Some days you got turned away when you got to the admission gate because they were at capacity at the time. Yes, it was a reduced capacity, but they were still busy. People were able to utilize these vacation rentals as a way to get away from the little boxes they lived in the skies in whatever cities that they were in. And you started to see a shift from people from New York, Chicago, California, all the way from the other coast wanting to come and move here. And there's a lot of reasons for that. We have no state income tax in Florida. We have a cheaper cost of living compared to a lot of other places like that. And more importantly, politically, we were able to have more people come to our state because our economy was open.
Yeah.
Restaurants were open. We had concerts. We had other things that made people feel alive again.
Yeah, and I think it's not just on the residential level, or the commercial level, like no other time. Like Ontario and Florida go back decades of snowbirds, but I think on a complete new level, commercially and businesses being driven and staying in Florida is like on a whole new level.
Yeah, so 17 out of the top 500 Fortune 500 companies now have a headquarter in Florida.
Yeah.
A lot of the tech companies decided to leave Silicon Valley and start to come here. And why not?
Yeah.
You have the lifestyle that you want over here. You have the luxury homes if you're looking for that. You have the luxury of having a yacht if you're a boater.
Yeah.
There's just so many things to do over here. And within a short distance, an hour to 3 hours, you can pretty much cover the majority of the state of Florida, which has, I think, the third largest population or fourth largest population in the country, with, I believe, over close to 22 million people living in one state.
Yeah.
So from a business perspective, it's great because your customers are a short distance away.
Yeah.
You know, if you compare that against a country like Canada, where the population is spread throughout the whole country, it's harder to get to more people.
Yeah. Tell us a little bit more about Orlando, and what could it start looking like? What would it cost for, let's say, a family to buy, if it's, let's say, vacation home or not in Orlando? Run us through that.
Yeah, so I think Orlando is a unique city because it offers a lot of buying strategies for an investor. Orlando has your typical buy and hold strategy if you're looking for a property to invest in and rent out on a long-term basis, because more than 60% of the population in Orlando rents. It's a very transient town, so you have people that are constantly in need of a rental. Rents have gone up about 30%, so from an investment perspective, it's great.
Yep.
A few years ago, if you were renting out a 2-bedroom for, let's say, for example, $1,300, now you're getting $1,800 or $2,000 for a very mediocre condo.
Yep.
We're starting to see more multifamily apartment builders coming in and building out apartment complexes. We're talking about, 20, 30 acres, 15, 16, 20 buildings, great amenities. So the tenant is essentially getting golf club living in their backyard. When it comes to real estate from an investment perspective, we're always talking about a cap rate, the return on investment. And although a return on investment is very important, we also need to talk about, especially for a Canadian viewer or an international investor, another important key measure, which is a return on lifestyle. Yeah. And that is something that you can achieve here with the least amount of seasonality here. So just like a buy and hold strategy would be a good opportunity for someone to invest, because the properties I think the median price for a property in Central Florida would be about $340,000. I don't think you can go purchase a property in Windsor, Ontario, which is probably one of the cheaper markets, for anything less than $700,000. No. Even as the market starts to shift, markets like here in Florida are maybe correcting a little bit, but you're not seeing that 20%, 30% slump like you're seeing in other parts of the country, because there's tons of people that are moving here. On average, about 1,000 people move to Florida a day.
It's literally the last to be affected, of not just because of position where it is geographically, but it's always getting the last bit of what the changes are happening north of the country.
But there's also a lot of drivers. We're in the last few years of the baby boomer demographic. They're not going to want to stay in colder climates, especially since they have the cash to want to move and take advantage of cheaper investment properties that they can invest in for their family. They can live in it for as long as they want. They can take advantage of it as a snowbird or as an investment property and leave it for their kids here. These properties will always appreciate. And we've seen it, especially here in such a hot market like Florida. Whether the market trends upwardly or downwardly, real estate always trends upwardly over time.
When we're zooming out versus the zoom in. Run us through what, let's say, it looks like with $500,000, you're buying a property in Orlando, and what you're left with is your bottom line. So what would that cost?
So I think one of the attractive investments that you could take advantage of in that market, whether it's at that price point or a little bit higher, would be a short-term vacation rental. Mm-hmm. The seasonality, as I mentioned before, is very low. You're looking at the slowest times of the year being when the kids go back to school. So you can rent it out throughout the year. At that price point, you can pretty much get into a 4 or 5 bedroom townhouse that actually has a private pool in the backyard, as well as in many cases, some of these developments are national home builders that are building clubhouses that are cost about $20 million that have the splash pools and the lazy boy rivers and all that kind of stuff. You could anticipate a nightly rental, depending on the time of the year and depending on the community, that can range anywhere from $150 to $250, $300, depending on the time of the year, maybe even $500. But if you move up a little bit more, you can easily get into a 5-bedroom house for $600, $650. And a lot of these homes range from a 4-bedroom all the way up to even a 14-bedroom home. And I know you're probably thinking to yourself, why do you even need a home that big? Mm-hmm. But the theory is the greater the number of beds equals the greater the number of heads. Therefore, you can house more people and essentially charge more on a nightly basis. Depending on how you structure your down payment, whether you're buying cash, so many different variables in terms of the types of returns that you can get. But if you look at it from the perspective of how much you can generate on a nightly basis, you can use a property management company to help you with the rentals. Essentially, they'll be helping you with the occupancy in terms of marketing the property and generating the rentals for you, as well as maintaining the property, doing all of your paperwork for you as well too.
Turnkey solution, yeah.
Exactly. And that could range anywhere from let's call it 18 to 20, 25%, depending on the management company. On average, about 20%. In our case, I think cash on cash, we've seen returns anywhere between, I would say, about 10 to even 30%, depending on how you structure the deal. Yeah. And in a lot of these communities, a lot of the maintenance is covered by the association as well too, in terms of the landscaping, etc. So you'd essentially be responsible for your own property, especially if it's a townhouse and your pool.
Yeah.
So the whole idea is that we've managed to create a turnkey, headache-free solution whereby we're lining them up with mortgage companies like yourself, property management companies, accountants, to be able to go through each and every step of the way to basically take the headache and make the transition as smooth as possible for a Canadian investor.
Yeah.
A lot of it is going to vary on several factors. Financing, how much money you're putting down. What does your house look like? So ultimately, when we're working with our clients, what we're trying to do is, by understanding trends and we're understanding where the market is going, we want to be able to guide our clients by being able to have their home stand out amongst the crowd. How do you do that? Several ways. Some people will tell you theming is the way to go. Now, I have two minds on that. I can tell you theming can be really great, but let's say all of us, a bunch of guys, are coming to rent an Airbnb. I don't want to stay in the princess room, right? So it depends on how you do that. But upgrading your home, having some nice amenities and features such as a game room, or like converting your garage into a really cool place to go hang out, whether it's pool tables or air hockey, and maybe decorating the whole place like you're inside a Star Wars spaceship would be the reason why you, or for example your wife, would select that home for your family to stay at over another. So we're here to help guide, generate the most amount of profit and occupancy that you can get from your house. I would also recommend tapping into your own network, because somebody like you who has tons of friends back home, your property management company is not going to be able to access those people as well too. So there's a lot of other things that you can do to help increase occupancy and increase your bottom line as well too.
Yeah, that's awesome. Dawood, this has been amazing information. Where can people find you online?
I think the best way to find me is just shoot me a message on any one of my social media platforms, which is Instagram, LinkedIn, and Facebook, by simply typing in my name, Dawood Bedrosian. And then, of course, you can always visit my real estate website, which is thebestfloridahomes.com, and or my radio show website, which is realsensenow.com. And I'll be more than happy to answer any of your questions about investing in Florida.
Yeah, and your radio show is awesome. I love that. I've listened to it many times. So
thank you.
So good. Thank you for being here.
Thank you. So good to be with you.